Hi, this is Brad Lamensdorf. I'm CEO of Active Alts, and I'm here this week to talk a little about the precious metals market. It's a interesting market recently as the Reddit crowd was trying to push silver to new highs, and I thought this was a good opportunity to look into the sector. It was in a very, very large bear market from 2000, from the 90s into 2005. Precious metals took off aggressively in 2005, and gold went from 500 to 1900. Silver, which was in the basement forever, went from $5 or $10 an ounce all the way up to 50. So it was a really, really explosive move during that time. And then in 2012, the bull market ended for that period of time, and we went into a ferocious bear market. And when we went into that bear market, a lot of the stocks and a lot of the companies that were involved in that area really cut back on their expenditures and really stopped looking for new gold and silver, precious metals oriented type reserves. So when you have to meet the amount of demand that's out there, these mines have to go out, look for more, find more, open up new areas of their properties to be able to really get their properties going to the point where they really can put out more supply. Currently, you look at the exchange, for instance, especially silver, which is probably much tighter than the other precious metals. And the silver market is interesting because the futures are trading at $30, and when you go into a physical shop to buy physical precious metals, silver would be charging you $40 an ounce to buy it. And so you think to yourself, why is there such a disparity? And the disparity is because it is really in that tide of demand, and the supply just isn't there right now. Silver goes into all sorts of solar panels, it goes into iPhones. So there is a large end user for the silver market now, and it is definitely very, very tight as far as the bottleneck from supply and demand. As we look at our first chart, we can see that the capital expenditures that the precious metals companies have had over the last decade has been going lower and lower and lower, which means companies have been very, very reluctant to put big money to work to find new resources and to open up their mine capacity. So this is the start of where a large bottleneck can occur going forward. We also see on the next chart that the free cash flow and the earnings power of these precious metals companies actually has improved tremendously. You know, value players and people that like to look at free cash flow and earnings and have a PE, they have not really looked at this sector in a long time due to the fact that these companies never made money. During the last bear market, it was very rough, and a lot of these companies have decided to operate in a profitable manner and not just recklessly drill for more and more different resources to put on their books. So the companies are in fantastic shape right now. They're all doing very well from an earnings and a cash flow basis. And then we see this big bottleneck coming in the future just due to the fact that the CapEx has been so very low over the last several years. So we really feel like that this area is going to be an exciting area going forward, and you certainly should be looking for more of that excitement on the upside. You can get all of our research at lmtr.com, and the long, short, and the focus momentum strategies that we run are on the activealts.com websites. Thanks so much for your time.